Maverick Currency Traders. This is Rob Reinhold. I'm joined by Ankit Sharma, and we are now in the 4th week of August, and we are coming to the end of summer trading, which I always enjoy because I like higher volatility. That being said, this summer, compared to most summers, has been really, really good. So I'm not complaining about summer trading at all this year. It's been really good, but we are still going to get a pickup after the U.S. holiday of Labor Day. So get ready for that. We will get more of a pickup after that. All right, in this session, we're going to go over what happened last week. We're going to take a look at all the broad markets. We're going to see the S&P breaking below major support. We are going to then score all of our broad markets and all of our currencies individually. And we're going to take the strongest and the weakest currencies, and we're going to pair them up and look for trading setups.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So let's start off with the news last week. We had a ton of news, and we don't really have time to cover all of it. But let's go through kind of the biggest news. We got some really bad news out of China. China came out with much worse numbers as far as industrial production, retail sales, and then one of their major property developers missed a bond payment, so people are worried about them defaulting. And the central bank, the Bank of China, came in and actually cut rates by 0.15%. So again, whenever you see that kind of panic, and then the central bank comes in and cuts rates, that raises people's suspicion, and people get a little bit worried and nervous. So that sent equities down, and then we saw bond yields continue to rise. We got all the way up to 4.3% on the U.S. 10-year, and then we backed off to about 4.2 at the end of the week. But these are the highest rates we've seen in a long time. And the cryptos got hammered. They got absolutely hammered. We have not liked the cryptos at all for the last month or two. And so no one should be long them because we've been saying, hey, there's better places to go. If we take a look at the calendar, as you can see here, we got the claimant count change out of the UK was a little bit lower than expected. But take a look at the inflation that came out on Wednesday. Much higher than expected at 6.8%. We liked the pound this week, and the pound was the best performing currency this week. This was the number we wanted to see, the CPI number, come out hot. We also heard from the RBNZ, and they did not raise rates. And in fact, they said that they are done with their rate hiking activities. This is not great for the Kiwi, but we'll take a look at the performance. Other than that, we had Canadian CPI come out hotter than expected. We didn't really help the Canadian dollar strengthen all that much. And then take a look at the Aussie employment report. Supposed to be a gain. It was a loss. That is a bad number. And so the Australian dollar was the weakest currency this week. So let's take a look at where we started. Last week, we were looking at Swiss franc, euro, pound, and dollar as the strongest currencies out there. And we were taking a look at yen, Aussie, Kiwi as the weakest out there. Let's see what actually happened as far as the numbers go. Let's focus first on equities. The S&P down 2.2%. The VT World Index down 2.6%. Take a look at that crypto. Wow, 16.4%. That is just a nasty, nasty week. Gold down, oil down. This was a down week altogether. And if you take a look at the S&P, we talked about last week, we were at very key levels. And we said if we don't hold these key levels, then we're going to be in a world of hurt. And look at this. We said we could see a pierce and then a recovery. And if we saw that, this market would be just fine. And then we said, if we don't see that and we see continued selling, then this market is no longer in a bull market. And you can see at this point, yes, we got a green candle on Friday. We probably get a little bit of a bounce up at the first part of next week. But this is no longer a bullish market. This is more bearish to neutral at this point. If we take a look at the movement in foreign currencies, our call was the pound was going to be the best trade of the week, and it was up 1.06. Our favorite shorts were the yen, the Aussie, and the Kiwi. As you can see, the yen actually strengthened. And we're going to be talking about this yen because as this market heads lower, the yen is a safe haven currency. And it will likely start to get a little bit of a bid if equities continue to go lower. So we're going to show that the yen is no longer on our weak list. It's now more in the center. The Aussie was the worst currency. We thought the Kiwi was going to be the worst of the week, but look, it was still down. So anyone pairing up pound Kiwi, pound Aussie had a great week this week. Take a look at these moves in crypto. They were nasty, they were ugly, and they were all week long. It was just selling all week long. Let's take a look at the markets and let's give our scores. Would having more trading capital help you meet your trading goals? Maverick Currencies is the oldest US-based Forex and crypto prop firm. We fund traders just like you with 5- and 6-figure accounts where you keep 70 to 80% of profits. Click the apply link on the top right of this video to start the process. This will take you to a 4-minute video that explains the trader position, and you can read a list of FAQs that answer pretty much all the basic questions you have. After that, if you're interested, fill out an application, and then you'll watch the full-length recruiting video and schedule an interview with our recruiters. Are you our next trader? Equities are now at a -2. So -2 is moderately bearish. That being said, we did have that green candle on Friday. We probably see a little bit of a relief next week, but we think we maybe come up to this 44.40 area where there's resistance. We might get a bounce to there, but this equity market is definitely in a little bit of trouble at the moment. If we take a look at our US bond basket here, you can see we are breaking out to new highs. Yeah, we pulled back a little bit, but we should hold somewhere in this level, most likely go higher to sideways. If this does go higher, US equities are definitely going to suffer because of it. And let's take a look at this crypto. Boom. We've been talking about this downtrend and how it's just been falling, rally, fall, low base, fall, little rally, base. As you can see here, big fall at this point. Ultimately, there is going to be some support down here at the June lows. But at this point, this is called a falling knife. And there's a saying, do not try to catch a falling knife. Let it hit the floor, wait, and then you can scoop it up when it's on the way back up. But right here, right now, we just do not like cryptos whatsoever. This week, we have just a little bit of news here. Let's talk about Euro manufacturing. These numbers have been getting better. These numbers could actually help the Euro move a little bit higher. We still do like the Euro on the long side. And this week is the Jackson Hole Symposium. For those of you that don't know what that is, once a year, all of the central bank heads get together in Jackson Hole, Wyoming, and they basically hold a press conference. They've been doing this for like 30, 40 years, and no one cared about it until I think it was like 2011, where Ben Bernanke, at one random Jackson Hole Symposium, used his speech to announce new monetary policy. And the market freaked out. And from then on, everyone's been watching this Jackson Hole Symposium, and the Fed has been using this symposium as times to introduce new changes to monetary policy. So they will be watching it. We don't know if we're going to get any changes. We doubt that we're going to get any changes, but it's not just Powell speaking. Pretty much all of the heads of the central banks will be speaking at this Jackson Hole Symposium. So it is on Thursday and Friday and Saturday. But again, Friday is going to be Bernanke when he speaks. So other than that, this week we think is going to be an okay week. We think that the market is likely going to rally higher a little bit, but we think those are going to be sold into. So we are shifting to a risk-off mode here. Ankit, what do you think about that change, going from more of a risk-on to risk-off here?
Absolutely. I think we have seen market sort of give up those key levels that everyone was watching. So this is where we talk about momentum. Everything is right now pointing out to the downside. And remember, market do test. And in a strong market, these pullbacks get reversed very quickly. So whenever you don't see this buying coming in or and these rallies are now being sold, I think the narrative of this market is changing very quickly. So we could see a whole different, next couple of months coming. I mean, we can see a whole different markets. But I think these are the inflection points that, as a trader, we need to know when the party's over, and we need to be on the sideline or maybe be a little bit more cautious. I think that's where we are at. And as we go from the summer trading to the fall, I think that's where we need to pay close attention where the next big move happened. But yeah, this is definitely the crucial time to make adjustments.
And here's the crazy thing, Ankit, and we're going to take a look at this when we get into all the foreign currency charts. During this big bull market run that we've had in equities, none of the risk-on currencies, the Kiwi, the Aussie, or the CAD, went higher. They all moved lower. I can't imagine what will happen if we really have a big risk-off move, especially if the risk-off move is China-related. The Aussie Kiwi could continue to go lower and probably pick up some momentum on the downside. It's just crazy that they didn't bounce whatsoever. So let's go through all of our currencies. We're going to give them all trend scores and velocity scores. And then at the end, we pair up the strongest and the weakest. I'm going to go through the cryptos here, and then I'm going to hand it off to Ankit to go through the Forex stuff. But look, we didn't like anything before. We haven't liked anything really since this low broke here on Bitcoin. So once that broke, and then we started to break down below moving averages, there hasn't been anything to like here. There hasn't been any reason to be long. And boom, this just came falling off. It's like when you drop a bouncy ball on a table, it gets to the end of the table, and then it just falls off. That's exactly what happened here. No reason at all to be buying Bitcoin here. Yes, at some point it will stop going down. Yes, it'll probably have a little bounce. If that's your game, you've probably already lost all your capital. That's not a good way to trade. Let's let the trend reemerge, and then it's much easier to go in and make some money when you're getting 4, 5, 6, 7 day runs, not 4, 5, 6 hour bounces. Much easier when the trend is in your favor. Ethereum, again, same thing. We didn't like it. There was no reason to be long it. At this point, there's still no reason to be long it. So we are going to just watch cryptos, and we'll just, when they finally do bottom out and when the trend finally changes, then we can take a look at trading those. Until then, I don't think anyone should be doing any crypto long trading whatsoever. All right, Ankit, can you take us through the Forex?
Absolutely. All right. So let's start with the dollar. I mean, I was looking at the charts, and what a turnaround in the US dollar. And we are now running into the 5th consecutive week on the upside. I know we looked at the dollar. I mean, since last year when the dollar took that big turn to the downside, dollar really hasn't been able to sustainably rally. And this is quite impressive. So, this is where right now I think we are running into key resistance. But we can't deny the fact that we are +2 and potentially could go to +3. So this is where I think we could pull back a little bit, especially if the market bounces. But I think that will be the time to use that as a second stage sort of an entry. I mean, this big move, we went from a negative to a positive very quickly. I think we could sort of see a bit of a short-term sideways price action. And then if the equities really start to take a hit, I think that'll be the point to get long again. So cautiously bullish here. I think we need to see a bit of a consolidation before we can turn higher. And you can see that velocity today, it's not really going anywhere. And I want to point out the one thing for today is that, this is where price action is different than what we have seen. We are seeing equity markets rally today. So today is a bouncing day. But look at the velocity. It's not down. It's actually just 0. So it's not really falling apart when the risk trends are turning. So something to pay attention to. I think the overall dollar looks more stronger to me than weaker, and something we need to pay attention to go into next week. Perhaps look for mild sort of pullbacks in the coming week. Now, yen, on the other hand, looks quite interesting to me. And I know we talk about all the fundamentals here. We talk about the Bank of Japan. I mean, one of the things, if you go back in time, is that the yen can spike at times when there is sort of a global risk-off sentiment. And I think this is the only time I would want to go long the yen. And look at that. a day like today, when the risk trends are strong, we are seeing the yen rally too. So again, I think things are turning a little bit here. And yen actually, I like to play yen maybe on the upside here, especially if the dollar is taking a break. I think we can see the continuation back and forth. I do not like the yen short here. I think you have to be very cautious with the yen short, but there could be a potential shorter term move to the upside in the coming weeks ahead. So we'll continue watching that in the next week. And currencies like Swiss franc and Rob, as you were talking, how certain currencies have not even turned, and market had rallied like 40% in Nasdaq and 20% in S&P. I mean, Swiss franc is a safe haven currency, and this thing has rallied entire summer. So we're just getting a little pullback today, but realize that this currency has been a +3 for the last, few months. So overall, we could retest that prior breakout point. But again, if the history repeats itself, all those pullbacks. I mean, we saw a pullback at the end of June. That was a buying opportunity. At the end of July was consolidation, and here we are running to the end of August. So I think there could be a short-term pullback, but we need to make sure that those levels kind of hold, because that will sort of continue this trend towards the upside, especially if there's a risk-off sentiment across the board. Now, euro, on the other hand, is a bit lagging compared to the Swiss franc, and I think if you take a look at euro, they're kind of in the same boat, but the Swiss franc looks a bit extended, where euro is kind of sideways, high basing a little bit here. So overall, nothing really has changed. But between the euro and the Swiss franc, maybe euro Swiss franc is having a bit of a profit taking in the short term, where the euro is sideways here. So maybe we'll pay attention to the euro Swiss franc cross. Maybe euro will be a better currency to go long in the coming week ahead. But yeah, pay attention to those euro Swiss franc crossing. The British pound, look at that big breakout. I mean, this thing has been on a run pretty much in the entire year. One-way trade. Look at that. Like no big pullbacks, consolidation and rallies. That's what we are seeing here. So looking at this, I mean, we have broken a key resistance level. So every time we get this big breakout, we could pull back or consolidate again. I think it looks extended to me here. But remember, these are the market conditions where overbought remains overbought and oversold remains oversold. So don't try to catch a reversal, because reversals are not as evident in these markets. There's more consolidation and continuation. So I like the pound to the upside. I would rather like to see a bit of a base here, but overall the price actually looks pretty strong. And there's no signal to go short here on this pound. And now looking at the growth currencies. So Canadian dollar, I mean, this week, I was really excited to see if that inflation and pickup in inflation really break the CAD to the upside. That did not happen. So there's that lagging sort of a price action here. Overall, we have seen CAD mostly has been following the U.S. dollar, but lately the dollar has been a lot more stronger and CAD has been sideways. This kind of reminds me of last year when the CAD didn't do much and the dollar kept running. So pay attention to CAD, but right now I'm not interested in playing CAD. I think there's other movements, other currencies looks much better here. Now, talking about direction, look at Aussie and the Kiwi. I'll be taking a look at longer term charts in the Aussie, but just want to take a look at this daily chart. I mean, base and a breakdown. I think we could continue to see the Aussie perform how other currencies have been, pretty much one way, and not a whole lot of bear rallies, just bases and drops. A day like today, when equity markets are rallying, Aussie is not even participating. So there's that lack of rallies that we are seeing in the currency market. Maybe this is part of low volatility environment in the currency market, but as things start to pick up, we need to pay attention to that as well. But right now, I like bases. Bases have been a good setup lately over bear rallies, which is not there. And lastly, the Kiwi. And Kiwi, oh boy, same thing. Kiwi has been slowly chipping away to the downside. Notice that not a whole lot of bounces. So one thing to take away from these charts is that there's a lot of one-way moves, which means that it's great for direction, not great for shorter term, looking for bounces here and there. You got to stick with the direction and play that direction. I mean, Aussie dollar, Kiwi dollar has been some great trades for this month. And as we go into this last part of August, maybe things can consolidate. But I think what we need to look for is the pickup in activity and pickup in that sort of a velocity in the coming weeks ahead. And, this kind of reminds me of 2022, where summer was, we started to see a slow break to the downside, and that downside move accelerated as September came along. So things to sort of pay attention to as we go into when we transition from a summer trading into a regular trading environment.
Thanks, Ankit. And I think you broke that down just so perfectly. And if we take a look at what really changed, the cryptos that were hanging out at 0, -1, they're all clearly -2, -3 now. They're really ugly. Remember, the yen was at a -3 last week. We have moved that up to a 0. Now remember, 0 sometimes means sideways. So if you take a look at CAD, CAD is 0 sideways. Yen is potentially 0, just like the dollar used to be -3, and then it got all the way to 0, then went all the way to +3. We are likely seeing that move in the yen. If these equity markets stay weak, I think the yen is going to keep marching up to +1, +2, +3. But for right now, as you said, Ankit, it's right at certain points. We need to see a little bit more strength out of it. And we see the dollar and the European currencies still holding on to the top spot. So let's take a look at velocity. This is where we closed on Friday. This is what's moving. So we got a ton of velocity to the downside on cryptos. But when we take a look at Forex, a lot of stuff has stopped moving on Friday. So we had these big moves Monday through Thursday, and then Friday we're starting to get a little bit of a consolidation. So we're going into next week very clear where we want to be long, very clear where we want to be short. We want to be short Aussie and Kiwi. We want to be long in, I like Euro number 1 is my favorite trade of the week. And then I'm going to put dollar number 2, maybe yen number 2. Boy, it's going to be tough on that one. But Euro is my favorite for the week because it's basing this week. And then if all the rest take a little breather, Euro should break out and move higher. So at this point, I don't think there's any great trades set up for the start of the week. So I'm going to be pulling up pairs that I want to be watching for possible entries on like Tuesday, Wednesday, Thursday, and Friday. Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader? So my number 1 trade is Euro. My number 1 short is Aussie. So let's pair up Euro Aussie. So here we are on a daily chart. You can see we've had 3 nice days up. We got a little bit of a pullback, and then we're getting some consolidation. So again, this is on a daily chart. I want to go into like a 4-hour chart. And what I want to really do is, okay, we have a clear uptrend. And we're just trying to time out, okay, pullbacks, we want to be buyers. Bases, we want to be buyers. As you could see here, we have a pretty decent little base starting here. So we broke out at that point, and we've hit this same resistance point twice. I'm looking at this saying, okay, I like this price action. Euro is strong, Aussie's weak. We had a big run earlier in the week. We're now basing, I think, a buy up here around 170.20. 170.20, that's going to be my spot for an entry if this thing does break out to the upside. So this is my number 1 trade. And look, I want to say that the Aussie and the Kiwi seem to have been like flip-flopping. One week the Aussie will be the worst. One week the Kiwi will be the worst. I think it's very possible that maybe the Aussie takes a break this week and the Kiwi is the one that actually takes another fall. This chart is looking even a little bit better because look how long of consolidation we've had. We've seen a lot of long consolidation pretty much all week in this. So the question is, where is the buy point? Where is the breakout? And it's going to be somewhere up around 183.40. Sorry, 183.84. Somewhere around here, between 183.80 and 184. This is going to be the point that I think you want to be long if this thing does break out. Those are my favorite two trades for the week. Ankit, what do you want to take a look at?
Hey, Rob. Well, I don't have trades that I'm per se looking at, but I do want to point out certain things on the chart because, again, I'm more preparing for transitioning from summer trading into the fall trading. And maybe the next week and a half is going to be that time where, we need to make sure that we're not over trading these environment. Things likely to have a big move one way or the other. So first thing, Rob, I would like to go to on a weekly chart. And I want to point out, the first thing I want to point out is the Aussie. Because again, the big question is, is the Aussie oversold? Like how far can it go? I want to point out on the Aussie, if you go out in time, is that look at that support on a weekly chart. If you look back in hindsight, the big COVID rally that happened in the Aussie. And Aussie really has stuck around for the most part. I mean, we tested this level 2021, 2022, and here we are 2023. But this time around, no buyers are coming in from that level. And if you look at the weekly chart, this looks like a confirmed breakdown to me. So next week, what I would like to see is failed sort of rallies in the Aussie. I would love to see some sort of rally happens. That's if the market bounces an Aussie rally. I'd rather I wait for those rallies to play out and just, use those as an opportunity on the short side because right now, I think the next big move in the Aussie can potentially come to the downside, especially if we stay below that support. So that's the sort of a line in the sand there. As long as we stay below that support that we just broke, I want to be continue playing to the downside. If we found some sort of a reversal, then that's really where we want to back off. So Aussie is the one that I just wanted to highlight. I think Kiwi is the same spot here. Kiwi is not as clean because Kiwi had a massive rally at the end of last year. So far you can see that we're just kind of unraveling those profits there. But overall, you can see we still have further room for this to drop, especially where it rallied from back in September last year. So Aussie and Kiwi both look kind of weak to me. I really like Aussie here, but I want to make sure that we are also seeing the markets lining up as well. So if the markets continue to get worse here, I think Aussie probably be a good short. Now, pound. I mean, this is the one, Rob, I think we've been talking about. And look at that breakout. That breakout off that key resistance that we haven't broken out for the last 5 to 6 years or 7 years. I mean, that's crazy, that level that we have kind of stuck around. So this looks like a complete breakout to me. And you can see that there's not a whole lot of resistance above that level. So this is the point where, I mean, I've talked to a lot of traders, and this is where, a lot of traders think that, I missed the pound move, or I missed this Aussie move, and maybe it should reverse from here. But every time I see these critical levels getting broken, this is where it's better to stay with the trend than try to look for the reversal. It took a long time to break. And when it does break, that's where the big move happens. Rob, if you want to bring up Canadian dollar, I want to just use the break on these basket as an example. Look at the weekly chart. Look at the Canadian dollar on a weekly chart. This thing was also sideways for the most part for the last few years. If you go back in time, you can see when the break happened. The break happened in 2022, and you can see after that it was fireworks. Before that, it was a lot of back and forth. So I like to use these breakouts on these currency baskets as a key inflection point. So right now, the only sort of constraint I have is the seasonality pattern. I'm not seeing a whole lot of movement taking place, or not a whole lot of volatility taking place. But these are the areas that we need to hunt for as we go into fall trading, and then see when the major forces come into play, where's a big move happen. So I am not too excited for next week, Rob. I'll probably take it easy, but I'm really gearing myself up for fall and see where the big moves will happen. Back to you.
Yeah, thanks for pointing all of that out, Ankit. Those are big moves that are likely going to continue, as you pointed out, for weeks and weeks, especially if we pick up some volatility as we head into the fall. Just so everyone knows, The 6-week period from September 1st to October 15th is the weakest period in the markets. So we talk about seasonality patterns. Equity markets, that's where the most crashes have been. The last 2 years, the market has fallen 10% during those 6-week periods. Who knows if it's going to happen this year, but we're heading into volatility, and that's why we really like these major breakouts happening. So everyone just focus on the velocity scores, the trend scores. Don't try to counter trend trade. These markets are giving you pips right now if you're long the European currencies and short Aussie Kiwi. That's where you want to be. That's where you want to stay. Everyone have a great weekend. Thanks for joining us. Goodbye.